Well, from a possible labor strike in the auto industry to a potential scandal in a burgeoning one, fantasy sports. DraftKings and FanDuel are the two biggest players in this fast-growing multi-billion-dollar business. And just like other new economy companies such as Uber and Airbnb that operate in regulatory gray areas, DraftKings and FanDuel have seen big money flow into their sites at a very rapid pace. But today, the sports gaming outfits faced fire after the New York Times said an employee of DraftKings accidentally leaked proprietary information to the public the same week he won a fantasy contest on a rival site. And that is raising a lot of questions about the integrity of the industry. The scandal, if that's what it turns out to be, is being compared to insider trading. And it's an apt comparison except for one thing. Unlike in the investment markets, no rules, laws, or regulations govern sports fantasy gaming.
Is it insider trading? Maybe not in the legal sense, but insiders are gaining or have access to information that could presumably give them an unfair advantage over the consuming public. And too many insiders are playing fantasy sports to take at face value any statement that nobody is utilizing inside information to win.
Until today, when both sites issued statements banning their employees from doing so. It's been common practice for employees to play on rival sites. In fantasy sports, fans choose real players to create their fantasy teams. Statistics compiled by the real players during games are then totaled to see whose fantasy team is best. It might be an advantage if someone knows how often certain real players are getting picked. Less popular players can be good value plays because fans who picked that player have fewer rival gamers to beat, raising their odds of winning. That is, if the player performs well on the field. And there's a lot at stake for these companies. Daily and weekly payouts, instead of waiting for a full season to play out, are attracting customers. And how? The Fantasy Sports Trade Association says 57 million people will play online this year, up about 40% from just last year. They'll pay more than $2.5 billion in entry fees, a number expected to top $14 billion in 5 years. Investors such as Fox Sports, NBC Sports Ventures, and Comcast, parent of NBR's producer, have backed these companies with millions, pushing their valuations north of $1 billion apiece. The sites pay the leagues and their teams millions in sponsorship dollars. In some cases, leagues have invested in the sites, though not the NFL, at least not so far. And why shouldn't they? More interest in the games and the players drives up TV ratings. The NFL Players Association even signed a deal to let its players appear in advertising. And those ads are everywhere. Fantasy sports were deemed legal in 2006 through a loophole in a federal law that bans online gambling. That law says fantasy sports are not gambling because they are games of skill rather than games of chance. But the sudden boom in fantasy sports has many lawmakers reconsidering that stance.
Clearly, we're headed towards regulation. We're going to have government regulation like we do in all forms of gambling, such as the lottery, horse racing, casino gambling, sports betting in Nevada. This has been the only form of gambling to fly under the radar. And make no mistake about it, it is gambling and it will be regulated.